Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it Hope Springs Eternal because that's exactly what happened with the rally that occurred on Wednesday. Everybody was hoping that we see a dove in there in Chairman Powell and what he's saying. And is the market turning now? Is the bottom in? And, I keep seeing that all over the place. Is the bottom in? Is October 13th? Is that it? Well, we'll see. Yeah, the thing I think for the bulls, they need to remember, beware. Bear market rallies are some of the strongest rallies that occur historically. And the bears need to remember that, in terms of looking for a turn, price action is what matters most. So we're watching very closely right now. Now, I took last weekend off because it was Thanksgiving holiday weekend. Decided to just focus on the family, focus on the holiday. I will be doing the same thing again around Christmas time, but I'll try to give you a heads up. So let's dive in. We're going to take a look at the S&P 500 today, but we're going to start off here with the industrials side by side, the weekly with the industrials, the S&P, and the NASDAQ composite. The Dow Industrials were up 83 points for the week right in here. So pretty small move. Of course, they came back after being down, as did all the major indices. The S&P 500 was up 45 points this week, and the NASDAQ composite was up 283, if I'm reading my notes correctly. Now, I want to look at the Dow Industrials versus the Dow Transports. So we got some interesting things going on here. They've been in sync pretty much. The Dow Transports were up 78 points for this last week. But this over the last month or two, the transports are not confirming the push that the Dow made above the August high. Okay, and I've talked about the Dow. I've talked about what I think is going on with here, that I think we've got a little flat happening. Let me just show you what I'm talking about. That this is an A, B, C, sideways corrective move. That's what I believe is going on here with the Dow. And this punched above that high right here. This did not confirm it on the Dow Transports, but also here over the last couple of weeks, we did not punch above the high 3 weeks ago like the Dow has done right here. So we've got some short-term divergence. We have a little bit longer-term divergence showing up in here. And none of the other major indices are confirming this type of price action in the Dow Industrials either. So it's going to be interesting to see. I'm seeing some things on the indicators. We're going to talk about that in a minute too. All right, let's go take a look at the SPX. Let's go back over here. Okay, here's the daily view on the S&P 500. So it was down 4.87 on Friday. So a little bit of a pullback in here. Wednesday, Thursday, what did it do? It punched right up and closed this gap. And on a 195-minute chart, which I'll show you in a minute, it almost came exactly right up to complete the gap on that. So this is really interesting. Now, we got this big gap right down here that I'm watching. We break down out of this trend line. I think we're going to fill this gap very quickly on our way down. The other thing that I've been looking at, and it's not picture perfect, but it does kind of look that way. When you draw a trend line right up in here, and at first I drew it like this, but let's just keep it right here. This looks like a rising wedge type pattern to me. Now, the key is, when do we break down out of this, break this trend line, break down out of this wedge? And when you do, typically you move very rapidly down to come after the retest the low that started, which is back down here, the October 13th low. Okay, so let's take a look at the Elliott wave picture. So right now, the preferred count is that we are in intermediate wave 3 and that we are doing 1, 2 within intermediate wave 3. Now, the Fibonacci relationships that I've got here, here's 61.8% and here's 78.6% of wave 2 as a percent of wave 1 in terms of retracement, okay? So we've gotten very, very deep. I'm going to show you on the SPY an interesting relationship between this corrective wave 2 in 3, and this corrective wave 2 within 1, okay? Almost identical at this point, okay? So that's pretty interesting. The other thing we're looking at here is in the zigzag corrective pattern that we've got A, B, C, right here at 4118 is where C equals A, okay? And that's typically the first marker that you're looking at. I mean, you look at other Fibonacci relationships also, but the one most common is that C equals A as a part of a zigzag. All right, so we're right in that territory. Let's just take a look over here. If we drill down a little bit, here's what I'm looking at. Either wave 2 ended with the high that occurred on Thursday morning, first thing Thursday morning, or we have a little bit more to go. It could very well be that we have a little bit higher to push up in here, mainly because of what I'm seeing with this little 3-wave move that we've gotten. I'm on the 130-minute chart, so that's 3 bars to the day. So here's Friday, here's Thursday, okay? But right now, I'm going to lean into this, with gives the benefit to the bears. We'll see whether it holds or not. But just beware, we could continue to push a little bit higher up in here. All right, I want to pull up the SPY. Okay, the wave count is identical on the SPY. Okay, the same thing. Wave 1, wave 2 of intermediate wave 3. We've come up, we've closed this gap on a daily. We closed it on a 195 minute. I'm actually showing the 130 minute over here. If I go to the 195 minute, here's what I'm talking about. You know, if you come right up into here, I mean, it came right up into that last candle that occurred on September 12th and closed the gap completely, okay? So the other thing that I'm looking at, so this gap is closed. And so then we talked about the same relationships right in here. I might as well I'm going to get rid of them for now just to get rid of the clutter. Here's this interesting, this blue line, 41016. What I did was I went back and looked and I said, well, okay, what was the retracement of wave 2 in intermediate wave 1, of wave 2 as a percent of wave 1? Well, it was about 74.8%. I don't have the number right in front of me, but pretty close. So I said, I took that same exact percentage and applied it to wave 1, and I said, well, where is that? I know, because we're getting kind of deep, so where is it? It's right here, 410.16. What was the high that was achieved on Thursday? It's not giving it to me. Here we go, 410. I've got another data window. I'm telling you, it's 410.00, and here's the exact equal retracement to wave 2 in intermediate wave 1, and that's 410. So we're talking about 16. So we're talking about 16 100ths of a point difference. Now, we could continue to push a little bit higher. And, you know, why do I say that? And it's because of the same reason I just talked about in here, that I think wave 4 ended right here. Let me go to the 130 minute. And so if that's the case, you know, it could be that we have a little bit more that we push up here, but it may just come up and just nudge slightly above this high. I mean, we've already got a very long extended wave 3. Let me just drill down for a minute. Let's look at the 65 minute. So here you see 65 minute. Why do I use 65 minute? Because it divides the day into 6 equal bars. So 1, 2, skyrocketing wave 3, zigzag wave 4. So we could get a 5th wave up like this. And that was a terrible wave 3. This is what I'm talking about, like this. And then you come down 1, 2, 3, and then you go like this. So we could get something like that. And again, these are hourly bars, so 6 hours, 6 bars to a day. So it could happen on Monday, and then we're done. So we'll see what happens. When I take this down even further, you can make the case that possibly we got a 5-wave move up into this high in here, but we'll see what plays out on Monday. Oh, I need to get rid of my marker and then go back to my cursor. Okay, so that is the SPY and the SPX. Let's take a look at some of our indicators. Let's look at the VIX first. Okay, the VIX has been pretty relentless and it's moved to the downside. What have I been watching? I've been watching the 10-day moving average, and I'm looking for it to turn and start trading above that 10-day moving average. It keeps trying, but then it fails. And so it hasn't done it yet. Now, where are we? We're down into that territory where since January, so here's back in January, you can see the lows that occurred in January at the peak. We've had 2 times where we got down below 20 in here. And so what I said was, let me just mark the intraday bar in here in terms of where this is, 1845, and over here in August at 1912. So it's kind of a little zone. Well, we're right there. We're right in that zone, okay? So I'm going to be watching this very closely. That support starts to come in. We flip. I want to see this start to trade above the blue line, and then the blue line cross above the blue-gray line and start to head to the upside in here. Okay, that's what we're expecting. Let's take a look at the McClellan oscillator. What is the McClellan oscillator telling us? Well, we're very close to being severely overbought. When you're above this dash red line in here, plus 150 on the oscillator, you are severely overbought. We're sitting at plus 148 right now. The key thing I'm seeing is this major divergence that's happened since when? This peak right here on October 28th. So we got a similar type divergence that occurred in August at the high, but where is October 28th? Let me go back to the SPY. Right here. See, that's why I put this dash red line right here. Here's October 28th. So since October 28th, the market has pushed higher, and the McClellan oscillator has not confirmed that move at all. Yeah, it's extremely in the extremely overbought territory on the oscillator, but it's not confirming this move, just like it didn't confirm the move back up in here. Now, that's a little more dramatic, but it's still sending the same message, I think. So the message is the setup is starting to occur. Okay, all the pieces are starting to fall into place. The VIX is getting extremely low. There's a whole lot of complacency and calm, no fear going on at all. I kind of think of this as almost like calm, storm, greed, fear. Okay. And we're down here where there's a very calming, greed type environment going on. As a matter of fact, I did want to show, I saw Jesse Felder tweeted this the other day, this fear and greed index that the Daily Shot had put out. And, we're right up there, okay, right, actually showing higher than what occurred in August and, the end of March into the beginning of April and the beginning of January. So I thought that was rather interesting, and it kind of fits with everything else that I'm seeing right now. Okay, so that is the McClellan. And then the last thing I wanted to look at is extremely overbought on the percent of stocks above their 50-day moving average on the S&P 500. So these various levels, right? So here's the 90% threshold, 80%, 50%, 30, 20, and 10, okay? So back in August, we got above that 90% of the stocks in the S&P were above their 50-day moving average for 5 days in a row. We've now been above it for 3 days. So we're in that countdown. We're watching, okay? How much longer are we going to get? We're going to get 2 more days? Are we going to get 5 more days? Or is this it? So we're kind of watching this very, very closely. So to me, this is another indication that we are extremely overbought right now. All right, so that's it for this weekend. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Check out the website, check out the membership. Everyone have a great week. We'll talk to you on the next video next weekend.